Welcome to the House Therapy, the podcast that helps you to create a home that you love to live in. I'm Nina Dwaron, owner and lead designer at ISO Design and Interiors. And each week, we're going to explore practical ways to help bring more beauty, function, and flow into your space. From design and staging to organizing, downsizing, and everything in between. If you want a home that truly supports your life and your family, you're in the right place. Let's get started. Welcome back to the House Therapy Podcast. Today, we are talking about something that many families are curious about, but are often afraid to ask about, and that is reverse mortgages. If you are an adult child helping your parents to make smart housing decisions, or if you're a homeowner yourself living on a fixed income and wondering how to make your home support your next chapter in your life better, this episode is for you. And reverse mortgages are often misunderstood. And, I must admit that it's not something that I understand a great deal about either, and which is why I have a guest on our show today. And some people think that with reverse mortgages, the bank can take your house. And sometimes other people think that this is really the last resort that you should look into. But the truth is that there are more nuance to this product than we know about. So I'm so happy to introduce you to Richard Mewhinney from Home Guard Funding. He specializes in reverse mortgages and has an abundance of knowledge about this product. And he's going to walk us through what reverse mortgage is, what it is not, what are some of the risks, and when it makes sense for you and your family. And as always on this podcast, our goal is to provide information, clarity, and never about misinforming. So let's get into it with Richard right now, okay? So thank you, Richard, for taking the time out of your busy schedule to talk about this mortgage product with me, because I just feel that not too many know or understand about this product enough. But first, why don't you tell the audience a little bit about you and what you do specifically?
Thank you very much, Nina. It's a great pleasure to be with you today. So my name is Richard Mewhinney. I am a mortgage broker with Home Guard Funding. Two areas that I really like working with are first-time buyers as well as reverse mortgages. The reason being is both of those demographics, there's a lot of confusion, misunderstanding how to approach obtaining a mortgage, purchasing a home, downsizing, preparing for retirement, all of those aspects. And I very much enjoy the opportunity to interact with my clients personally and provide the education, answer all the questions that they have, and keep it as low pressure and informative as possible so that regardless of whether it's their first purchase or whether they're considering a reverse mortgage, as we're going to talk about today, they come to the decision with a fairly clear understanding and knowing that if they have any questions, they have the ability to ask them and get a straight answer.
That's fantastic. Well, what I forgot to mention too is that, I didn't find Richard recently. Richard and I have known each other for a long time. And not only is he a friend, he's also our mortgage broker as well. So he handles our mortgage for our own home. So I trust him implicitly because he's very thorough and he really wants to help you get into the home of your dreams, and he'll get really creative with his approach to getting you into the right mortgage product that fits with your budget and your lifestyle. So, all right, let's talk about reverse mortgage. Can you sum it up like quickly what a reverse mortgage is and how is it different from the traditional mortgage?
Oh, there's so many differences and misconceptions pertaining to reverse mortgages. So, in a
Yes.
nutshell, a reverse mortgage is tailored specifically for the senior marketplace. One of
When
the
you say
fun,
senior, how old?
from 55 years of age and up. Depending on what the individuals are looking for, generally speaking, a good sweet spot to consider where it's really of significant benefit, although I'm not excluding those that are 55 to 60, but in your 60s into your early 70s, that seems to be really the sweet spot because there are certain characteristics in terms of qualifying for a reverse mortgage which are extremely different than with a standard mortgage. With a
So why
standard
why would that be a sweet spot?
Simply because, as you know, and everybody sees the ads, let's be fair. There are two large organizations. There are actually four lenders of reverse mortgages these days, but two really are predominant in terms of the advertising that you see. Home Equity Bank, which is the largest and longest standing provider of reverse mortgages in Canada, and Equitable Bank. They've relative newcomers, but they are also advertising a fair bit. Of course, it speaks about the fact in the ads that it is accessible to people that are 55 years of age or older,
Mhm.
but really criteria in terms of the amount that you qualify for, because really the reverse mortgage is a mechanism to extract equity out of your home tax free.
Mhm.
And the amount that you qualify for is largely predicated on how old are you? If you are 55, generally speaking, you are going to perhaps receive 25% to 30% loan to value. Loan to value simply represents the amount of mortgage relative to the value of the property at the time that the mortgage is placed. So, in that context, the younger you are in that age group, the lower percentage you are going to qualify for. And that really addresses one of the aspects that a lot of people have as a misconception pertaining to reverse mortgages is that a reverse mortgage is designed to strip all the equity out of the property. And it's not the case at all. In actual fact, the reverse mortgage is actuarially designed not to strip all the equity out of the property. And that's why, based on the age, the amount that you are eligible to take out of the property is determined in part by the age. Obviously, there are other criteria. We will probably talk about those in a few minutes, but that's one of the aspects. So there, the younger you are in the age group that qualifies, the lower percentage relative to the amount that you would normally be able to get, you would be able to access.
So is that percentage based on the value
It's
of the property versus the if the property still has an outstanding mortgage?
the fact that the property has an outstanding mortgage. Let's be clear, the reverse mortgage must be in first position. That means that if there's an existing mortgage, from the proceeds with the reverse mortgage, the first item we have to do is to be able to pay out the existing mortgage.
First, yeah.
Now, now, in the case of home equity bank, we can sometimes put a second mortgage behind that. That's a separate issue, and that is going to vary by individual to individual, and that's something that we would have to talk about because that would be something very specific to each way we structure it.
So would you say that this product is most beneficial if you are mortgage free? I suppose it would be.
Not
And
well.
you,
The answer to that, unfortunately, is a bit of yes and no, because if somebody has a relatively small mortgage, for example, let's say they have $100,000 outstanding. We're currently going through a period, as you know, where interest rates have increased over the past number of years, and while
yes.
they have come down, if you took a mortgage out 5 years ago, you might have had a mortgage at 2%. Now we're looking potentially at a 4% rate, depending on the various lender and the options that individuals would qualify for. That can be quite a shock to the system, even with a
Sure.
relatively small,
Double.
even with a relatively small mortgage. But if people are living on a fixed income, that can have a significant impact on their ability to do the things that they want to do. And so a reverse mortgage may be an option in some of those circumstances. So let's assume that the property, we might be able to acquire a reverse mortgage of $500,000, just for sake of argument.
Okay.
If they have a $100,000 mortgage, taking the first $100,000, paying out that mortgage is not a significant hit, and they still have $400,000 potentially to use. And that will probably come up in another question that you have later on, and that is how can we structure a reverse mortgage? But just as a little bit of a teaser at the moment, there's such a wide variety of ways that we can structure a reverse mortgage that are tailored to the individual and the objectives that they have. A lot of people have one misconception, and that is you qualify for this amount, you have to take it all up front. That the answer to that is no.
Okay, so you only have to take out what you need at the
You
moment.
The minimum amount that you have to take out with virtually every reverse mortgage is $25,000. That
Okay.
covers the fees, etc. If we
Yeah.
have to pay out a mortgage, then we tailor it to that amount so that we look after that. Any residual can be used in a wide variety of ways, and we can structure that in different ways depending on the objectives of the clients. That's one of the unique features.
Okay, so if the minimum amount is $25,000, which is not a lot, right?
No,
Why would somebody go the route of the reverse mortgage versus the credit line? You know what? I might have answered that in my own head already, but you go ahead.
well, fundamentally, let's step back. I'm going to rephrase your question in a different way because I
Okay.
think it will make more sense. And that question is how do you qualify for a mortgage and how do you qualify for a reverse mortgage? First and foremost, let's remember a reverse mortgage is just that. It is just a mortgage like any other mortgage product. It's a financial obligation which is registered against a property. And there aren't any special conditions that give the lender more authority to have influence over what you do with those funds than with a regular mortgage. In actual fact, and we'll come to this a little bit later on, there are more guarantees to protect the client within a reverse mortgage than with a regular mortgage.
Right.
Now, having said that, uh, sorry, I went sidetracked there. Just remind
That's
me the
okay.
remind me the question that you
Like, what's
asked
the
me.
difference between
Yes,
a
okay.
reverse mortgage versus a line of credit?
So let's take a look
For
at the
that small amount, like if you're going to go bigger, I get it.
yeah.
But
So let's take a look at this. First and foremost, with a line of credit, there are a number of factors that come into play. A line of credit is treated like a regular mortgage. So in order to qualify for a line of credit, you have to have income to show for it. Depending on the amount of pension that people are coming to the table with, they may or may not have enough income to qualify for a
okay,
particular for a line of credit.
okay,
The other thing which comes into play, however, is the fact that with a line of credit, there are regular payments that are required.
that's true.
With
That's
a
why I
re-
said I answered that question in my head as I
with
was
a
asking you.
with a reverse mortgage, there aren't any required payments, and we'll talk about some of the options in a little bit later on. But there aren't any actual payments required on the reverse mortgage. That gets paid out at the time that the property is sold at the desire of the individuals that have the house and the reverse mortgage or the estate if the last person leaves because of death, for example.
Right.
So in that particular context, that's one key aspect. The other thing, though, with even a secured line of credit is technically a line of credit, and a lot of people do not realize it is a callable loan.
Mm.
And so that could be even an increased risk for a retired couple that are living on fixed incomes.
So, but you're saying the reverse mortgage cannot be called until the house is sold.
No, and as with any standard mortgage, it isn't the lender that has any specific extra rights that allow the lender to say, "Gee, we don't like this." There are very limited conditions that are put on the borrowers with a reverse mortgage. They have to, at least one person that is on the mortgage has to be resident in the house. So it has to be tied to the principal residence.
Mm-hmm.
Uh, they, that is really the key aspect from that standpoint. But in addition to that, they can only have one reverse mortgage. In Canada, you can only have one reverse mortgage at any given time. But you
Oh,
have,
so you mean if you were to own multiple properties, you
that's
cannot?
correct. That's
Okay,
correct. Now,
I didn't know that.
we can get into one particular lender allows us to bridge across properties to increase the amount, but we can talk a little bit more about that later on. But
Okay, yeah. So,
fundamentally,
yeah, yeah. Go
uh,
ahead. Sorry.
fundamentally, the reverse mortgage, it just lives with the mortgage, and as long as the individual that at least one of the individuals that is on the reverse mortgage is living in the property. But even there, this is where one of the guarantees comes in. Let's assume for a second that it's a couple. And one of the members of the couple needs to move into assisted living.
Okay.
Because it's underwritten based on the younger age, there's no obligation on the other person if they're fit and healthy and want to remain in place. They can still remain in place without any interruption. And that brings us to one of the uses of the reverse mortgage as well, just as a bit of a teaser. And that is the fact that then sometimes what people will do is if they've got a residual balance, that can help offset some of the costs of providing the care for their loved one
Yeah, that's a really
because
great point.
because the funds which are residual can then be drawn either as a lump sum or in we can structure it on a monthly basis, or if they can manage funds well, we can structure that in various different ways that would allow them to help offset the costs of the care,
Yeah, that's a very good point.
which
And
also
and
helps
so
people
the
remain,
reverse,
which also helps people as well remain in place if, for example, if the assistance that's required, maybe getting a PSW coming into the home to assist with their loved one, but that way they can still remain in place.
yeah, no, that makes a lot of sense. So the reverse mortgage is also always based on the youngest person in the home
It's weighted
on
towards
title.
it's weighted towards the youngest person on title. Everyone on title or everyone on the mortgage has to be at least 55 years of age.
Got it. Got it. Okay. Well, I think that you busted the myth that the bank can potentially uh, take your entire home. But what are some other myths that we should be aware about that you can help bust today about reverse mortgage?
Well, like I say, one of the big myths is the fact that, and I've already touched on this, is that somehow a reverse mortgage is structured to strip all the equity out of the property. And that's quite the contrary. And it's not even to the benefit of the bank to do that, whoever the lender is. And let me explain.
Yes, please.
So in that particular context, we've already addressed the age where that assists us in the underwriting process to determine the amount that you would qualify for. But have you ever heard of a mortgage that has a no negative equity guarantee?
No.
So a reverse mortgage actually has a no negative equity guarantee. In
Is
so
that
much
the
as,
only product that does have that guarantee?
Well, let's put it this way. If you have a regular mortgage on your property, let's say the property value drops significantly, and you and your husband find yourselves in the position where you have to sell the property. If there's a $100,000 balance on the regular mortgage that you have, do you think they're going to say, "Oh, you don't have to worry about that"?
Yeah, you're right. Yeah, that is happening as we speak right now,
Ex-
often.
Exactly. So with a
Yeah.
reverse mortgage, and please understand, this circumstance has only happened on a handful of occasions in Canada. So it really it doesn't occur with any degree of regularity, and it doesn't make sense for the institution to put themselves in the position. Because in every reverse mortgage, as long as it's a true reverse mortgage, which is provided by Home Equity Bank, Equitable Bank, Bloom Financial, or Home Trust, which is the most recent addition to the list of organizations that provide real reverse mortgages. In the unusual event that the property value is less than the value of the reverse mortgage plus the accrued interest, to settle the mortgage at the time that you choose to sell, or if the estate has to sell, for example, then to settle the mortgage, it's the fair market value of the property. And then, of course, the only other expenses then become the legal fees and discharge fees. If there happens to be that $100,000 balance, as I described in
Yes.
the scenario, the bank walks away from that. They have no
Oh,
claim
so
on that
they
100,000.
absorb that risk.
That's correct. So why would they underwrite a
So they
reverse
protect
mortgage?
themselves as well.
Exactly. But there's no advantage to that right underwriting the product such that it would strip the equity out of the property.
Right. That makes sense. That makes sense. Right. But has it ever happened that,
Yeah. Oh, yes. Yeah. Like, I
okay.
mean, it would be a lie to say that it has never happened. And when we take a look at particularly volatile markets, say the Calgary market, which is very much a boom bust economy, and they've gone through very severe cycles at various points in time. Undoubtedly, it may have happened there a few times, but literally in Canada, the number of times it's occurred is probably less than, significantly less than 1%.
Oh, okay. So it's very small. So how long has the reverse mortgage product have been in place? Like when was it introduced?
In Canada, it was very small, but I believe, if I remember correctly, Home Equity Bank first started to come into the market with a reverse mortgage in around 19, in the mid 1980s, maybe early
So it's been
19.
around for a long time
Yes, but the penetration in Canada is actually relatively small. If
compared to
we take
where?
if we take a look at where reverse mortgages are in place that are closest in the way they operate as in Canada. So that would be Great Britain and Australia.
Okay.
In Great Britain, there's about a 40% penetration of reverse
Really?
mortgages.
And what did you say Canada was?
It's about 10% or less
Why
currently.
is that, do you think?
There's been a lot of misunderstandings over the years. It's not been as available because we have had for a long time just the one provider. Now we have four.
Ah, okay.
Over the past handful of years, the last 4 years or so, reverse mortgages have certainly accelerated in the Canadian marketplace, but there's still a lot of growth in that marketplace, and there are more and more inquiries coming on that particular product.
Especially as, you know, we have a high rise in the aging population too, right? So, you know, I've learned a lot about reverse mortgage through you, but I know that there's still a lot of confusion around it. So, you know what? Let's talk about what reverse mortgages what you can use with reverse mortgage right now. So why don't you share a little bit about that? You've already talked about a couple of things like, helping to age in place. Sorry, I still have a little cough. Age in place, and then it can help to fund like nursing care or nursing home. But where else can you use, the funds from your reverse mortgage?
Great question. And it is, there are so many potential options from that standpoint. So, what is becoming more and more common, particularly in the current market, is pre-inheritance gifting to kids and grandkids.
Tax
As
free?
yes. So in that context, we have situations now where kids and grandkids, they're launching, they have careers, they have good incomes, they want to buy their first house, they have good income, so they don't have an income problem, they have a down payment problem. And so what's a tax efficient way to allow parents or grandparents make a gift so that they can see the kids enjoy the inheritance instead of waiting until you pass away? And how can you do that tax efficiently? Well, let's take a look at one of the aspects of the reverse mortgage, and you alluded to it. When you take out the money with a reverse mortgage, that comes tax free. You're really just taking out the equity that you already own in the house. So there's no tax implications on that. Let's take a look at if you take $100,000 out of your RIF or your RSP. That's taxable income. To get
Yes,
100,000, depending on the other income that you have, you might have to take 150,000 out to pay the tax obligation and still
that's
give the
right.
100,000.
Yes.
Whereas you can take $100,000 out of your house and use that as a gift. There's no tax implications for the person receiving the gift. There's no tax implications on the person giving the gift.
That was my next question. The receiver, would they be taxed?
No, no.
That's, yeah,
And
that's a really
and
great use of the product.
and when I deal with first-time buyers these days, I would say that at the present time, at least 60% of my first-time buyers have some form of gift coming from parents or grandparents that otherwise allow them to be able to enter the market. And so a reverse mortgage is one mechanism that can be used to address that without any tax implications on either party. If we take a look at it from the standpoint of taking that out and paying that tax bill, like I say, depending on the individual, you're paying 30 to 50% in taxes. Uh,
That's big.
Whereas you might be accruing interest at 5%,
Yeah,
6%. That's not a significant hit, relatively speaking. Not to mention the other benefit, which I alluded to, and that is the fact that you're still around. You get an opportunity to enjoy seeing your kids or your grandkids enjoy the opportunity to be able to get into their first house.
yes, that is a really great benefit actually, and a great use of it, especially if they're not really needing the fund to fund their lifestyle, right?
Okay, yeah. And then in terms of lifestyle, we have the opportunity to use that simply to allows people to enjoy their lifestyle. The very first reverse mortgage which I wrote, this goes back quite a few years ago now, for a couple. It was a call from a couple where it was a common law couple, living seniors. She had a good pension. He was trying to protect. They were trying to manage their finances independently. He owned the home though that they were living in. There was no mortgage on the property. He took a reverse mortgage out at the time to pay him about $1,000 a month. That would allow him to be able to go to Florida with his common law spouse. They would be able to enjoy their winter time as snowbirds and be able to do that the way they wanted to do it. It also allowed him to have the comfort that he would be able to preserve the house so that when the time comes that he'd be able to will put the house in the estate for his daughter.
Mm-hmm.
Uh, so what we did is we simply structured the reverse mortgage. He didn't have an existing mortgage, so they just worried about taking out the initial amount up front. And we set up a program whereby $1,000 conveniently dropped into his bank account every month. And that can be adjusted. He could have increased it if he needed more money, or at
Mm-hmm.
various points in time, he could have put a stop to that particular amount. But the fact is, it only accrued the interest on the amount that he had taken. So let's
At the time,
assume,
at that time.
yeah, so let's assume that he had been approved for $300,000. He would be able to take $300,000 over time. He's taking it at $1,000 a month plus the original 25,000. It's only the amount, the gross amount that he has taken at that point in time, plus the interest is accruing interest.
Right, right. Yeah, no, that makes a lot of sense. Now, let's just stay on the same topic about, what you can use a reverse mortgage for. In addition to that, from what I understand, is that you can use it for home upgrades and maintenance as well, right?
Yes, uh, this is where you can let your imagination run wild, quite frankly, because any of those. Let me give you an example. I had a client about 3 years ago now, 82-year-old lady living in a century home just east of Newmarket here. And a lovely home. Her situation was, as 82 years old, she was very spry, very active, but she was going to be going in for hip surgery
Mm-hmm.
in about a month and a half. What she wanted to do is, because it was a century home, she wanted to do a renovation on the washroom so that it would be more accessible for her recovery period, and she wanted to put in a stair lift so that she'd be able to get up and downstairs as independently as possible to minimize uh, any obligations on the part of uh, relatives assisting her during that recovery period.
Mm-hmm.
But what she needed is she needed about $50,000. Now, in her case, she wasn't overly concerned about estate. We talk about that as well. We take all these things into consideration. Her comment was she had already given her kids the cottage, and she just really was concerned about looking after herself. And she said, "Well, my granddaughter's just going to inherit whatever's left from the house, so that's all fine." She said, "If it's zero, it's zero." What she really needed was about $50,000 to do the renovations.
Mm-hmm.
We had her approved for about $400,000, but she only needed 50. And
That's nothing.
so we arranged it such that when the mortgage closed, she received the $50,000. She was able to get the renovations done. And I'm not sure that she has used any more of the funds which are available to her, but they're there. Needless to say, her granddaughter is still going to have a significant inheritance left
Mm-hmm.
over
Yes.
at the time when she isn't able to do that.
Yeah.
Meantime, my last conversation, she's now enjoying her life because she's back to being able to kayak and all sorts of other activities
Amazing.
because everything is set.
Okay, so I have another question for you. So those are all great uses of the funds for sure. I think that it makes a lot of sense. Now, can you take the reverse mortgage out and put it into an investment that will earn income to pay you an income from the reverse mortgage. Did that make
Oh,
sense?
yeah, absolutely. I mean, there aren't any specific restrictions on how you use the funds. Think of it this way. It's
Because
that would that
literally that can
that would be
offset the
like
interest.
that would be like asking, for example, I've got $100,000 in a bank account. Can I take all the $100,000 out and use it the way I like? And the answer is yes. You take the equity out of the property. Uh, and if you want to put a portion of that or a significant amount of that into investments, as long as we've addressed the issue, like I say, where it has to be in first position, if there's an existing mortgage, we pay that out. Sometimes there's an advantage to pay out other liabilities that have accrued, and we can talk about a case similar to that that I've had as well. Then there's not a restriction on what you use for the rest of those funds. If
Amazing.
and another common use is preserving investments. Let me give you an example. This past year, I had clients. Their situation was they both wanted to retire. They were getting to the point where they wanted to retire. In fact, she wanted to retire last summer, which we were able to assist with. Their challenge was they have a significant property, about $1.8 million property in the York region area. And they had accrued, they still had a small mortgage. They had accrued some liabilities from renovations that they had completed in the house. Part of the renovations were done because a couple of years ago they had a daughter who had passed away and they had custody now of an 11-year-old granddaughter. They are considering downsizing in the next few years, but they didn't want to disrupt their granddaughter because they want her to at least graduate with her friends from elementary school before going into secondary school and looking at perhaps that time frame where maybe they might downsize a little bit. Now, downsize in their particular circumstance isn't moving into a condo. They'll be buying another house in a less expensive area. And so what we did is we were able to get them a reverse mortgage. We looked after the liabilities. Part of the rationale was they didn't want to disrupt their investments. They were quite happy with the returns on the investments. That was their pension going forward. They wanted to continue to manage that. So by getting the reverse mortgage tax free, that allowed them to maintain those investments and still look after the other elements without any additional payment obligations. In fact, we reduced their payment obligations
Cool.
because the mortgage payment disappeared. The other liabilities were paid out, so they don't have to make the monthly payments on those other liabilities, whether it be credit cards, lines of credit, etc. And so now they're able to do that. She was able to successfully retire, starting to phase herself into that retirement phase. They both indicated that they might do some consulting work during their retirement, but this has given them the time to be able
Yeah,
to do that in their own time and not feel pressed that they have to make decisions or delay retirement going forward.
that's amazing. So now, having said that, in this situation, if they were to downsize and sell their home, in which case they have to pay back the reverse mortgage, then
Yeah, well,
they
the interest, great question, but let me, sorry for cutting you off. What we did is they qualified for about 600, $700,000. We took $450,000 up front. And in order to future-proof their downsizing, the residual amount is available that they can use as a deposit on the house that they purchase. So they don't
oh,
have to
okay.
take that out of investments. And then when they sell the property, then that mortgage is paid out.
Yes.
But because that mortgage is paid out, then if they still require any small mortgage on the other property, we can put a reverse mortgage on that property for
That
them.
was my question. That was where I was leading. Because you said that you can only have one reverse mortgage at a time, but when you sell and then you get another house, you can still do another reverse mortgage there.
That's correct. Now,
That's cool.
one of the vendors of reverse mortgage, let's compress the time frame. If somebody were looking to purchase and sell, there is one of the vendors which would allow us to blanket a reverse mortgage, such that we could blanket a reverse mortgage over the property they currently own as well as the one that they're purchasing, close the one on the one that they're purchasing, and then so there are different ways to structure it. Like, I mean, that's what I say. I had an inquiry a couple of weeks ago, and their question was, "Could you tell me the rate on a reverse mortgage?" And I
Yes,
can't,
yes.
and I can't because depending on how we're structuring it, which type of reverse mortgage product fits best, where the property is located or type of property, age, so many different factors come into play. And of course, as with any mortgage, the term. So, what type of product, what type of reverse product we put them in, the rate could be very different.
But
And
on average, though, how much more is it than the traditional mortgage, would you say?
well, a reverse mortgage is marginally higher. And let me,
Marginally only?
yeah, maybe about 1%, 1.5% higher.
Okay, so it's not crazy. It's not like double.
No, but let me
And I
explain
think
what,
that that's where people worry about, right? Like,
but
that the interest is so high and it's, what do you call it? Compounding. And that's why, at the end, there's not going to be anything left.
yeah, but there are a couple of factors on that. So, first and foremost, we have to remember that why is the rate marginally higher? As we've already talked about, the bank has no special rights to tell you you have to sell the house. The obligations that a client has with a reverse mortgage is, and these are fundamentally the qualifications outside of age. Do you have enough money that you can pay the property tax, maintain your property insurance, maintain the property, and otherwise enjoy your daily living? I mean, that's it. And so there's very few documents, generally speaking, that we require when we're doing a reverse mortgage compared to a standard mortgage. But along with that, because it's just a regular mortgage, as long as you're meeting those criteria, if you happen to be fortunate enough and be able to live for 30, 35 years uh, and have a reverse mortgage, the bank actually never knows when they're going to get the money back. Because
Yeah.
remember, there's no obligation to make a payment. Now,
But you can if you want to.
you can make an interest payment if you want, and there actually are penalty-free prepayment options at the anniversary dates.
Like
But
the annual anniversary dates.
yes, but the reality is that you have the option of making interest payments if you don't want the interest to accrue as much. If somebody wants to do that, the bank will calculate the maximum amount of an estimated interest on the mortgage. You can pay up to that amount. Let's assume that that number happens to be $750 just for sake of argument. If you're a couple and you take a look at your expenses and everything and you say, well, we can't really afford $750, but we'd like to pay $500 for interest. Guess what? They can pay $500. They just make the arrangement with the bank. They'll take $500 out of their bank. Now, the other thing that is interesting, and you don't get this with a regular mortgage, aside from the fact you can't dictate the amount you want to pay, is the fact that uh, if we turn the clock forward 2 or 3 years, maybe the economy's changed a little bit. You can't afford $500 a month anymore, or maybe someone had a part-time job as well, and they've decided that they just want to retire. Then they can call the bank and say, we don't want to make the $500 payment anymore. That's fine. That then it starts to accrue.
So flexible.
Yeah.
Yeah. So my next question is, can you use the reverse mortgage to pay off your traditional mortgage?
Well, yes, and that's what I'm saying is the fact that a reverse mortgage has to be in first
First.
position.
Yes.
If you have an existing mortgage,
Mm-hmm.
then the first obligation we have to do is say, how much is the existing mortgage? Can we get enough that we can pay out that mortgage? Because that mortgage
Right.
would have to be paid out at the beginning.
Right. Okay. So yeah, so that can definitely be used. Okay,
Oh,
so
yes.
a lot about like really like a lot of benefits to the reverse mortgage. I don't think a lot of people know about that, and I myself I knew a little bit about it, but I certainly don't know that much about it. But let's talk about some of the downside. What are some downsides that we should be aware of about reverse mortgage?
There is always the risk that depending on economics and the market, let's face it, there are business cycles in every market. Uh, if you hit markets at the very worst possible time and based on interest rate, there's always the possibility that you could fall in that small percentage where the property value is less than the outstanding mortgage, in which case, while there's no negative equity guarantee, you're not then getting any capital back from the sale of the property. That's a risk. And depending on the market and the individuals that we're working with or types of property, sometimes we might have to take a look at it and say, this may not be a good fit. Now, how do I do that? Anytime that I'm working with a reverse mortgage, I don't treat it entirely like just a mortgage product, even though it is a mortgage product. I approach it from the standpoint of a little bit of financial planning. We are going to talk about estates. Not that I'm a financial planner, but we're going to talk a little bit about estates, what the intentions are of the couple. Also, with a reverse mortgage, I'm always going to do some financial illustrations, usually running between 10 and 15 years out, making fairly conservative assumptions based on year over year growth for property value and maintaining the interest rate, or in fact, even increasing the interest rate, assuming that it's going to go up as opposed to down. So then when we take a look at it, then we take a look at it from the standpoint of what's the equity left, say, after 10 or 15 years. And I'll usually do that with an assumption of very conservative year over year growth on property values. When I say conservative, I'm saying 1, 2, or 3%. If we take a look at the past number of years, even with the current adjustments, while property values have gone, we probably over the past few years are still up 5 to 10%.
Yeah,
So
no, for sure.
So in that context, we can't forecast based on every circumstance, but anytime someone is talking to an individual for a reverse mortgage, they should be able to provide financial illustrations so that you can assess what does this look like 10, 15 years out.
Right. So, have you yourself or heard of any cases where they netted zero?
Not in my practice or not that I specifically am aware of, but I do know that it has happened.
Okay, all right.
But
Because
like I
was
say,
that poor planning
but
or?
like I say, well, because they're not my cases, I can't really say.
Mm,
But the bottom line is, I know that like I say, it's an extremely small percentage.
right, right. Okay, okay. Now, are there any situations or cases where like a reverse mortgage would not make sense for an individual or a family?
I would say the answer to that question would be an obvious yes. There are obviously circumstances, and that's where each individual client is unique and the family situation is unique. Sometimes we have circumstances where uh, mom and dad are seriously considering a reverse mortgage, but unfortunately, it's characteristic. Sometimes there are kids out there that are thinking in terms of how much am I going to get in inheritance.
Yeah.
And depending on the influence, that could influence a circumstance. And if it's going to cause a family fight, the answer is it may not be best suited. It depends very much on the clients themselves,
Yeah.
right?
Yeah.
Sometimes, if there is any uncertainty, in the same fashion as when I'm talking to clients with a regular mortgage, purchasing a house, we've had this discussion: fixed rate or variable rate or adjustable rate. Some people don't want an adjustable rate, even though historically they are lower, simply because they're very risk averse. They don't want to take that particular risk. If getting a reverse mortgage is going to cause an individual uncertainty or angst and always questioning it, it's not going to be a product for them.
Yeah. Yeah. So,
If
typically, when it comes to this discussion about mortgages, who is putting up more of the resistance, the children or the senior?
It can be both, because there's an awful lot of misunderstanding on
Yes,
reverse
there is.
mortgages. There is a segment of the population that are absolutely convinced, and no one is going to change their mind, and I understand that, and that's fine. That it's a scam, and it's just going to take all the equity out of the property.
Yeah,
And
like,
fair enough. If that is where you are, then it is absolutely not the right product for you, because you're always going to be questioning it.
yeah, yeah.
Uh,
Because like I myself have brought that up with some of my clients where their home needs updates in
right.
order to sell for the best possible price. And I've mentioned the reverse mortgage, and they're like, no, 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 we don't want to go there at all. We don't want to talk about that, right? Like they seem to have like a great resistance. And from where my standpoint, I know that it's because of a lack of knowledge. And I always encourage them to talk to someone just like you to get more information, but they are so resistant.
And that's just it, though, is it's a function of education, which is really why I predicate my practice on education first. I'd like to think when I see my clients for the first time, particularly talking about reverse mortgage, but really with every mortgage product, I approach it from the standpoint of education. I try and keep it as low pressure, but provide concrete information for them to consider so that they understand what it potentially looks like.
Yeah.
That is absolutely critical with this particular product. Let me put it this way: a reverse mortgage product, it's not like a traditional mortgage in so much as, if somebody is looking to buy a house, it's immediately, let's get the application, let's sort out, let's find out what you would qualify for, et cetera, et cetera, et cetera. When I deal with somebody for a reverse mortgage, the application comes after we've had that initial meeting. And quite frankly, that initial conversation in some circumstances can last 6 months. It's not been unusual where somebody's considering this, thinking about it. I give them a lot of credit because they're actually planning. They're thinking through the process. They're looking for the information. So it never hurts to have that conversation, to actually see the illustrations, see what the numbers look like.
Yeah.
In actual fact, when it comes to, say, renovations like what you're talking about, Home Equity Bank has a reverse mortgage, which actually is an open mortgage. In other words, no penalties. Interest rate is higher. The fees are a little bit higher, but they are typically short term, where we can
Oh,
put
okay.
in.
And then they just pay it back after. like once they
which
get some funds.
which could be used again to look after the renovations, et cetera, et cetera, et cetera. Increase the value of the property so that it will sell for more, especially with good staging from individuals like yourself. And then they pay that mortgage back, and it just you can move on from there.
Yeah, no, that's a great point. It's a very good point. Now, what are you seeing these days? Like, who is inquiring about reverse mortgage more? Is it the senior or the adult children on behalf of their parents? Like, what trends are you seeing?
In most cases, the clientele that I've been seeing are the individuals that would actually take the mortgage,
Okay,
but
that's good to know
in
that they're
but in all
informing themselves.
circumstances, when I'm having the meeting with them, I leave it open to them. I say, if you want your power of attorney, if you want your kids as part of the discussion, I'm very happy to have them with your permission so that they can hear exactly what you're hearing.
Yeah, amazing. Richard, this was so informative. Thank you so much for sharing your knowledge about this product. That it confuses a lot of people. It makes a lot of people weary, and I think that you did a great job today at informing the audience about what reverse mortgages can do, and it makes me think about my own situation as well. So thank you so much for that. And for our listeners, reverse mortgages, we know that it's not right for everyone. It may not be right for everyone, but understanding what your options are, especially if you have limited funds or living on fixed incomes, can make all the difference in your financial independence. And whether the right path for you is to renovate your home so that you can age safely in place, or eliminating monthly payments, or looking to downsize into something that's more manageable, the goal is the same, right? It's creating the home that really can support your life in your next chapter, and definitely not the way around. You don't have to be house poor. So if this episode resonated with you, please share it with your parents or your adult children and get the conversation started. These conversations are way easier when everyone has clear information to work from. And if you want to learn more about reverse mortgages or any types of mortgages, please reach out to Richard directly. I will include his full contact information in the show notes, okay? And if you're unsure whether staying in place or renovating or downsizing makes more sense, just reach out to us. We help families of all different situations and sizes to think through their housing decisions strategically. So, it doesn't have to always be emotional. So remember, if you take care of your home, it'll take care of you. Until next time, take care. Bye for now. Thank you for listening to the House Therapy Podcast. If today's episode inspired you, be sure to follow the show and share it with someone who would love it too. For more tips, resources, or to work with me directly, visit isodesign.ca. Until next time, remember, with a little effort, every home can be beautiful and every space can be functional. And remember, you deserve it.